Hey, what's going on, everybody? Welcome back to another video. In today's video, we're going to look at a new ETF from LongPoint ETFs, not to be confused with 9Point. This one is the MOAT ETF. So, actually, I'd never heard of this ETF. I had never heard of this company until I came across this article from the Globe and Mail that they were announcing their distribution. So, it says here, guys, the MOAT ETF is seeking to provide high income and moderate capital growth primarily by writing put options on a portfolio of North American equity securities. And then they declared their distribution of 20 cents a month on this one. So we're going to jump into the ETF, take a look at the company, the holdings, all of that stuff. But as always, guys, nothing here is financial advice. I'm not a financial advisor. And if you go ahead, hit that like button, I would really, really appreciate that. So we'll jump into LongPoint ETFs, guys. Here's their website. It says here, LongPoint ETFs bringing specialized ETF ideas to help navigate Canadian investing. They got this cool kind of iconic shot of this lighthouse in the water, very Canadian style. And if we actually scroll down to the bottom of the webpage here, here's the lighthouse, and it says the name LongPoint is derived from a cherished location in Canada, specifically the LongPoint Lighthouse, situated on Twillingate Island in Newfoundland. This lighthouse holds personal significance to Steve, as it represents not only a geographical landmark, but also a connection to family heritage. Here's the lighthouse. So that's where the name came from. And if we actually take a look into the team here, we see the CEO is Stephen Hawkins, and a couple of interesting things I noticed is, it says that he does have about 30 years of experience in the investment industry, but it also says that he was the president and CEO of Horizons ETFs from 1995 until 2022, and Global X, formerly Horizons, right? So this guy's been around the game for a long, long time. So I thought that was pretty interesting. And they do have a different suite of ETFs. They've got a whole bunch of them on their website here, but a lot of them were like the 2x daily leverage, 3x daily leverage, stuff like that. The one that we're going to be looking at, guys, is going to be the MOAT Income ETF. This is the Active Premium Yield ETF. So here's the page for it. They've got about 2.5 million of net assets right now, 0.75% management fee, and a risk rating of low to medium. Now, it says it's designed for investors seeking high income and moderate capital growth. They earn premiums primarily by writing put options on North American equities, and they have an active portfolio management expected to identify income producing opportunities. So this one is definitely an income focused fund. The MOAT Active Premium Yield ETF will primarily write out of the money, short dated cash secured puts on North American securities with strike prices and expiry dates selected based on volatility and available premium. The cash cover for the put right portfolio will be invested in Canadian dollar cash and cash equivalents. The underlying equities for their put right portfolio will typically be selected based on competitive moats. I guess that's where the name comes from, and other sustainable advantages within an industry that may lead to long term growth of market share and profitability. The ETF may write out of the money, short dated covered calls, enter into a combination of income focused option strategies, and invest in one or more other investment funds. So, this one, guys, it seems very active and very flexible. And it says the ETF may hedge exposure to the US dollar based on market outlook and current exchange rates. So, even down to the currency hedging, this one seems to have a lot of flexibility, which, that's pretty interesting. Not too many ETFs are super, super flexible when it comes to all of those different things. Now, there's no performance data because this one's only been trading for about a month now. But we'll look at their holdings. They do have 35 holdings, and they do have monthly dividends. They actually have an annualized distribution yield posted on the website of just over 12%. So that's interesting as well. Not too many ETFs post their yield before that performance data comes out. So I thought that was interesting. And here's their top holdings, guys. They got Rogers, TMX Group, Dollarama, Virtue Financial, Wheaton Precious Metals, Canadian Natural Resources, Cameco, Amazon, Canadian Pacific, and TD Bank, right? So lots of different stocks. And the weighting is, between 3.8 down to about 3% for their top holdings, guys. And so this is like diversified between Canada and America, right? Again, monthly distributions, and that first distribution coming in at 20 cents per share. Now, the first thing I thought of, like the first other ETF I thought of when I saw this one, is the Harvest Premium Yield. Even down to the name is kind of similar, right? Harvest Premium Yield Enhanced ETF. Now, the Harvest one is going to be different in, a lot of different metrics, but the AUM under the Harvest one is bigger because it's been around for a bit longer. So we got an AUM coming in at just under 20 million. Also, twice monthly cash distributions on the Harvest one. The risk rating is slightly higher at medium, where the LongPoint one was low to medium, and then Harvest is a bit more concentrated with 20 holdings, whereas the MOAT ETF had 35, right? Now, the other differences are that this Harvest one is going to be a 0.65% management fee, where the MOAT was 0.75%. But, to me, these ones seem very similar in their strategy. But the MOAT ETF, it just seems to have a lot of flexibility and active management within the strategy. So I thought that was pretty cool, you guys. Let me know what you think about this one. There's a lot of similarities between this one and the Harvest one. Even if we look at the price movement, they haven't been around too long. HPYE from Harvest, it's not been trading for that many months, but really it's only gone up or down by 10 or 20 cents. And if we look at MOAT, it's only been about a month, but it's really only moved a few cents. So I think with those strategies of the puts and the flexibility of covered calls, maybe the volatility is different than some of the other covered call ETFs that we're used to out there. But anyways, guys, this is MOAT from LongPoint ETFs. You can check it out on longpointetfs.com. I hope you like this video. Feel free, leave me a like, leave me a comment, and I will catch you guys in the next video.